the purpose of having NEDs on the board was to have an independent review to be taken up. Then So the case study, what we have done, we looked into, see what was the flaw in that particular situation, what is the appropriate thing, and then also later on we have um, learned about the nominations committee, and then see there was a recommendation which was to be given in that particular case about what is the purpose and the benefit of having a nomination committee in the organization. So simultaneously, while learning that, we were able to connect it to that. So then we did understand about the disclosures, what are mandated disclosures and the voluntary disclosures. Basically, the purpose behind taking up any voluntary disclosure was to ensure that the information is provided to the stakeholders, because stakeholders seek information from the organization for better decision making. So that was the purpose behind that. So for that reason, voluntary disclosures are taken up. So in that context, we did look into the social environmental issues, the sustainability aspect of it, see what plans the organization has in terms of sustainability, what is sustainability audit, then the carbon footprint, the amount of pollution that is emitted from the organization and what measures are taken, and the management systems which put a check on the environmental issues that are created by the organization. We have IMAS and then ISO 14,000. Then later on, we also did learn about an important concept called as integrated reporting. See, in the of late, this topic is being tested in the examination. So here as part of stakeholder analysis, because stakeholders are seeking information from the organization, the best possible way to provide information to the stakeholders is by way of integrated reporting. So that's the concept what we understood. The 6 different types of capital under the concept of integrated reporting. The financial capital, anyway, it is disclosed in the financial statements. It's already reflected in the financial statements. But then we also have learned about 5 other different types of capital. The reports on these capitals are integrated with the report on the financial capital. Therefore, it's called as integrated reporting. Now, integrated reporting is taken up and the information is disclosed for the benefit of the stakeholders for better decision making of the stakeholders. So that's the concept. After that, we did learn, we have started with this concept of what is internal control system. Okay, to ensure that there are no fraudulent behavior or frauds happening in the organization, or accounting fraud, specifically accounting fraud happening in the organization, instead of an external auditor giving a view about that, if it is better to have a control system within the organization that every organization has to adopt. So that was the context in which we have looked into. Then the internal control definition. So it is a it says that the internal control system is a network of systems established. So ultimate aim is to ensure that the organization objectives are achieved. Okay, in terms of what are the objectives of the system, internal control system, to be more practical, there would be orderly and efficient uh, operations carried on in the organization. Assets are safeguarded, prevention and detection of fraud and error, accuracy and completeness of records, and then timely preparation of financial information. We understood that, see, the internal control system should not be a separate system, but then it should be embedded with the regular activities of the organization. Then there should be the control system should be able to respond to the changing risk within and outside the company. So how do they respond? So there is something called as noting down of various events, and then what impact do these events have um, on the organization. So what is the amount of monetary loss that can happen on account of happening of the event. So internal, external, whatever events happen, they do make a note of it and then quantify the monetary loss. So assess what would be the impact of that. Then includes procedures for reporting control failings or weaknesses. um, the roles and responsibilities of different people in the organization also we did look into that. What is the role of board of directors, senior executive management, heads, and all employees? There are 5 components in the internal control system. The framework that is given by COSO has 5 components: study about the internal environment, the risk assessment, control activities, information and communication, and monitoring. So study the internal environment thoroughly about who are they, what are the policies and procedures, what is the responsibility of each of them, then what is the seriousness of the management, and what are the employees about their um, moral ethical standards, etc. So everything about the internal environment first should be studied. After that, the amount of risk that is present has to be quantified. It has to be calculated, risk assessment. Then different control activities that are to be taken up to ensure that fraud does not take place. So that is in terms of restricting the access to employees to be present or use the assets of the organization. There are segregation of duties. So no individual should be assigned with more than one task. Okay, so that will keep a check on if at all if there is any fraudulent behavior. Okay, then we see that all information that is required um, to understand about the risk aspects have to be gathered and also to be communicated to the people in the organization. As things are implemented, there should be continuous monitoring. The 3 levels of management also I did explain to you. The strategic level is involved in planning for the entire organization as a whole. Tactical, in detail, intricate planning by assigning the task to departments or individuals in the organization. Also use the resource allocation. Operational level, they are involved in implementation of the strategies, but at a day-to-day level, they also are involved in planning. Okay, so these are the 3 different management levels and the planning that they are involved in. Information flows for management. See, when information is provided to the management takes decisions. So the first thing is the information has to be gathered. It has to be the facts and figures, when they're gathered, we call that to be as data has to be processed to make it as information is um, analyzed, and then the analysis is provided to the management so that management takes better decisions, useful for decision making. Attributes of information, the information characteristics, and then at what levels they are affected. So that's till that point we have learned yesterday. So today we'll start with fraud risk management strategy. Okay. Any doubts in what we have done till now? Quite a large portion we have finished. So any doubts, anything, anywhere? Okay. As usual, silence. Okay. Fraud risk management. Okay. So what is fraud? What is error? Anyone? Would you like to share your view about what does it mean as fraud, and or how do we differentiate between fraud and error? Anyone? even if it is uh, yes, that's right. Very good. Fraud is intentional and error is unintentional. Both of them, it is about some happening of something wrong, which is not appropriate. So, which is not the normal thing that has to happen. Um, See, that is error, a mistake, something which is not supposed to happen. The same thing is with fraud also. But somebody committing a mistake unintentionally, we refer that to be as an error. But then someone is intentionally bypassing the rules and then is involved in doing something wrong for their personal benefit. That is called as fraud. So now here the purpose of having an internal control system is to ensure that the fraud does not happen in the organization. It is eliminated. That is the purpose behind having an internal control system. So now it is important that every organization has an internal control system. So now um, depending on the organization structure, they would have their own control system with the policies and procedures defined and then communicated to the employees. Now everybody understands because it's already communicated about the details about what is not appropriate, what is considered to be as fraud. Okay, then when they are communicated about that, so then they would not be involved in fraud. So that is the intention behind that, and then organization can run smoothly. The whole purpose behind having all this is that. Okay, now we have fraud risk management strategy. So in terms of managing the fraud risk, see fraud risk, if it has to manage, so the management has three different key elements or three different stages this can be dealt with. The first one is fraud prevention, second is fraud detection and fraud response. Fraud prevention, all possible measures taken up to prevent the fraud from happening. Any idea what could be a possible thing about um, preventing the fraud from happening? Is there any possible um, way in which they can stop the fraud from happening? Randomly, any idea, doesn't matter. Randomly, how is it possible to prevent fraud? Any one of you, what can be done? Please think and tell. You randomly anything roughly. What if you were a manager? If you now you are studying this to become a leader, isn't it? You by passing this examination, ACC exam, you will be exhibiting your ability to become a leader, isn't it? So as a leader, you think about how can fraud be prevented. Anyone? I'm not asking any technical question. No, general thing. Okay. Okay. I got an answer in the chat box. It says by reviewing the books to avoid any error, or also fraud occurs when there is a third party. There's help taken from third party. Okay. See, as part of the internal control system, one important aspect what we have mentioned was about information and communication. So all the possible information relating to the fraud happening of the fraud, or what possible ways in which a risk can occur on account of fraud, should be first gathered. It has to be communicated to people in the organization. That's step number one. So a I mean, any kind of an issue which is there with respect to fraud, happening of the fraud, how do they get that? So generally in the organization, there is something called as a risk register maintained. The register will have details about what are the possibilities. At the time of learning about risk management, which we will be studying little later, there is a topic called as risk management, how the risk management strategies are taken up in the organization, that we will be studying after a while. So there is a risk register which is maintained, which has the details about what possible risks are can happen in the organization, or so some details would be there. So some kind of information based on past experiences or general awareness about that industry, and so that would be available to provide some information. So the people in the organization are made aware of what possibly can happen, and what is that they should not be involved with. So there is some amount of awareness created for the people in the organization. They have to make it clear about the anti-fraud culture. So what is the value system in the organization, what is that they believe in, what is appropriate, what is acceptable. So that has to be made known to the employees or people in the organization. So have an anti-fraud culture, such kind of a system, um, and the value system what they believe in. So anything related to that about the policies and procedures which they are supposed to frame for the organization, all those measures have to be taken up and inform or communicate that to the people in the organization. Just because of somebody is taking these measures, inform them about the anti fraud culture or the possible risks that could happen, making them aware about that, it will not 100% prevent the frauds from happening. Some or the, because that's the human nature. Some way or the other, sometime or the other, there is they are prone to get tempted and be involved in fraud. So then, if somebody is involved in fraud, see, all of that cannot happen completely in secrecy. So there's some information others in the organization, if not the top management, maybe at other levels of management, some kind of information can be gathered by people in the organization. They may sense that some fraud is happening, then that could be given as a feedback. So when feedbacks are given, the first important thing, or the factor which stops them from sharing the feedback is um, I mean their identity being revealed. So would not want the identity to be revealed. So there is a concept called as whistleblowing. So anyone knows what is whistleblowing? It basically talks about, anyone to share what is whistleblowing? Whistleblowing talks about gathering the feedback, not letting the identity of the person who's sharing the details be um, revealed in any case. So maybe some kind of hotlines can be arranged where they can share the information, share the details about the fraud happening. Okay, so no one would get to know about who has complained or who has brought that into notice, etc. So that's the concept of whistleblowing. Whistleblowing is um, gather the information, but the identity can be, I mean, not necessary it is disclosed. So it is not disclosed without disclosing the identity of the individual collecting the feedback. Have a sound internal control system which is very effective to identify. So we did study about the components. So thoroughly the internal environment should be studied. They calculate all the risk is calculated. Second component is risk assessment. How to calculate? So have an idea about what are the possible risks that can happen, or what are the different events that can happen internally, externally. So understand about that, the impact of these events on the organization, calculated in the form of monetary loss, and then finally calculate the value of risk. So um, that's the second component. Third component says that have proper control activities taken up in the organization. Ensure that no fraudulent behavior happens in the organization. Then gather all that information, communicate it to them, and then constantly keep monitoring about how things are happening at the organization. So if an effective, if a sound internal control system is installed in an organization, that itself will take care of preventing fraud happening in the organization. So that's the first aspect of it, is which is fraud prevention. Okay, so in spite of taking prevention measures, still there is every possibility that fraud may happen in the organization. So when fraud happens, while it is happening, or in that process, uh, it should also be become possible to detect it. Okay, that's the second thing, fraud detection. Most frauds are discovered accidentally or as a result of information received, that is whistleblowing. So frauds are identified because of accidentally or intentionally someone shares that information. Okay, same methods of discovering fraud. Some methods of discovering fraud are, see, they can have regular checks taken up, that is stock taking and cash count. Um, then again, it depends on how what is frequently performing regular checks or frequently taking up regular checks. Depends on different factors from organization to organization. We can see how frequently do they take up the checks. So uh, count on the number of units of stock that is present in the stores department, count on the cash available in the cash box, etc. Cash transactions are to be verified. Okay. um, Warning signals or fraud risk indicators. So when there are signals about fraud happening in the organization, so how would they know? If there are failures in internal control procedures, lack of information provided to auditors, um, auditors verify, auditors give a fair view about the financial statement. So they they have to be provided with some evidence about the transactions that are recorded in the financial statements. So based on the evidence, they would verify and approve of those transactions. So if they do not provide full information, or some information is missing, that is when it is provided to the auditors, that is an indication that something is not appropriate. If everything was fair going on in the organization, complete set of details would be provided to the auditors. Okay, the external auditors take up the activity of auditing, conducting an audit in the organization. Now, we still have not studied about audit committee. We will be studying about audit committee. So audit committee or the internal audit function, so that will connect the external auditors to the financial statements. But then financial statements can be verified when they have the objective evidence of the transactions. Therefore, all these details, the internal audit function or the audit committee takes up, they connect the auditors to the financial statement. So they act as a bridge. So then if there is some part which is missing, then we can understand that that is a signal, that is a warning that things are not appropriate. Everything should be in place intact, and then complete set of information has to be provided to the auditors. If they fail to do so, then that can be considered as a signal. Then unusual behavior by individual staff members, if it is observed, then that can be taken as a warning signal. And then if there are accounting difficulties, it's not transparent enough, there are accounting difficulties, that also should be taken as a warning signal about some fraud happening in the organization. Already I did explain to you about what's the concept of whistleblowers. So from time to time, gather information from the whistleblowers, or have a effective system wherein people have confidence in that, and then openly they come and share their feedback on the through this system, whistleblowing system. So they become whistleblowers, by which any kind of fraud happening in the organization can be brought to the notice of the management. Okay. First thing is prevention. Second thing is detection. First, take all possible measures to ensure that fraud does not happen. Second thing is, as things are happening, it should be detected, maybe because of uh, um, accidentally, or because intentionally someone shares the information, or if they identify the certain signals, warning signals that are given, based on that it should be sensed that there is something inappropriate going in the organization. That's how fraud is detected. Then we see fraud response. See, after the fraud is detected, what is the response of the management? See, when something wrong has happened, how do they respond? How do they react to that? Is the response. See, the fraud response plan sets out the arrangements for dealing with suspected cases of fraud, theft, or corruption. So then, in that case, okay, procedure for evidence gathering that will enable decision making, that will subsequently be admissible in any legal action. So based on that, they have to prepare. I mean, the system has to have something wherein they would take measures to ensure that such a thing will not happen again in future. Okay, so first they would see that procedures for evidence gathering. Based on this evidence, okay, that will enable decision making subsequently be admissible in any kind of legal action. So they can frame something, they can decide about what course of action would be taken up based on detecting the fraud. Deterrence. See, a deterrent value. What is deterrence? A deterrent value can help to restrict. So ensure that such a thing, the action that they take will ensure that such a thing will not be repeated again in future. So response is, if they are okay, if they are not very serious about when fraud is detected, then people who are involved in fraud will gain confidence to do it one more time. But once it is detected, if the management um, response is about fraud deterrence, ensure that they take a legal action, and which will prevent such a thing from happening. So they include that into their internal control system, the procedure of how to deal with uh, a situation where fraud was detected. So a deterrent value and can help to restrict damage and minimize losses to the organization. See, the organization's response to fraud may include internal disciplinary action in accordance with personnel policies, civil litigation for the recovery of loss, or criminal prosecution through the police. So any of these measures can be taken up as a response. If they don't respond, if they don't react, things will be the same, it will continue in the same manner and no improvement would be there. But there should be a serious response to that. So internally, their policies and procedures have the consequences if someone is found guilty of being involved in a fraud. If there are policies and procedures, act according to that. So decide what should happen next. Some kind of civil litigation can be taken up to recover any kind of a loss that was identified, or prosecute them based on the criminal procedures. Whenever we study about internal control, we along with that also study about internal audit. See, because audit will help to identify anything which is inappropriate. So the control system is handling about to ensure that the frauds do not happen. Audit helps internal control system. Audit identifies what is not appropriate. By the nature of work, audit internal audit is taken up. The nature of work